Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Well, our technical trader, Kevin Cook, is going to help us take a look, technical look that is, at the markets post-election here. And he joins me right now. And so now that we've seen the outcome, that uncertainty is removed from the market. What are the charts telling you?
At least we have a president, and
Yes.
we don't have an up-for-grabs election anymore.
Right.
And I make no value judgments on what the market is doing today. Big sell-off here. It's 11 o'clock Eastern time right now as we're talking.
Yeah, November 7th.
Big sell-off.
Right.
Obama's the president. I don't necessarily connect the two because I never knew who the investment community and Wall Street really wanted to be in the White House anyway.
It was never really clear, was it?
Yeah, and we know that the fiscal cliff is the bigger issue. Mm-hmm. We know that we'd have to deal with that. So now we've got this sigh of relief sell-off, so to speak,
Yep.
and then we get to the battle lines start getting formed on the fiscal cliff. But let's take a look at some of the action right now. Here's the S&P. I'm showing a low here of like 1401, but since I took this chart 20 minutes ago, we've cracked 1400 for the first time in over 2 months. I believe September 4th was the last time we were through 1400. With strong support throughout August. It's was support here into early November, and it has now failed. And the volume's pretty heavy. If you look at the spiders, the SPY, the ETF tracking index for the S&P 500, in the first hour they traded over 50 million shares. And by the time I came down here at 11 Eastern, we're trading 75 million shares. Now the average daily volume is 150 million, I think, for about a 90-day average volume is not even 150 million. So we're already halfway to topping. So the one thing that stands out though is the VIX is not much higher, and we'll look at a chart of the VIX in a moment. So SPY, I'm still looking for support here somewhere. We're sitting on the 100-day moving average. I've got the 50 and 100 on the S&P 500, and that 100 comes in right at 1402. We could penetrate that and pop back up. It really depends on the sentiment here. Are big investors going to stand aside now for a week, 2 weeks, until they know how the fiscal cliff is going to get resolved? And for some people, this was an easy prediction to make. Stand aside until then. Right. I was just using the charts and thinking that it was priced, the uncertainty was priced in, and we could go higher from here. Okay. Let's look at the Russell. Russell, obviously the weakest index of all, and falling through its 100 and 200-day moving averages here. 200-day is at 807. Russell's already been through that. And it would really need the big caps here to stage a rally to turn the Russell around.
So do these charts in any way reflect any of the latest rhetoric out of Europe from Mario Draghi and
Yeah, I'm glad you brought that up. Yeah, there was weak data, at the core in Europe today from Germany, and Draghi made some comments about the recession is hitting the core. So that's an economy we don't expect to turn around anytime soon. Although some people, even as recently as a month ago, were saying, hey, Europe's bottom. They're not going to have a big recession. Maybe it'll only be 0.5%. Well, that remains to be seen. It could get worse before it gets better.
So that may add to our market woes here?
For sure, yeah. And I'm going to just show Apple here as it breaks down to new lows here. I show a low of 565, but it's actually been to 561 as of 11 Eastern. And I've got the Bollinger Bands on here just to highlight how it's sliding down, like a kid on a slide at the park, just sliding down the lower Bollinger Band. I've got 100 and 200-day moving averages here, and this thing, trading to 550 wouldn't be a surprise. It should have been a surprise for the past month. That's like the halfway back point from the big run this year, 400 to 700. Mm-hmm. All right, last, take a look at the VIX. Now the VIX may be above 1850 now, but really it only popped a point. So for a 30-point drop in the S&P, we only got a 1-point bump in the VIX. So there's a little disconnect there about where the fear is. We may see this VIX gravitate towards 20 as the selling accelerates and more sell stops are hit in the 1390s in the S&P. So, this is where we're at right now. It's not looking good, and it all depends on if big investors stand aside for a week or two and just let this drop until we have more certainty about the fiscal cliff.
All right. For other comments and analysis from Mr. Cook, please go to Zacks.com if you're not there already, and you may link to his latest comments right off of our homepage, not only in Cook's Kitchen's column space, but also in Zacks Real-Time Insight. In fact, there is where you can have some fun and join in the conversation with him that he may start. With Kevin Cook, I'm Terry Ruffalo.